Okay, time for the first video of the 2020s. I found this interesting article that says Japan's economy isn't doing so well, so I thought it would be interesting to read it. I think this is interesting because if you look at how Japan performed over last year, it actually didn't do that bad. That's a pretty decent performance, for Japan at least. So let's see what they have to say. 2020 look ahead. Japan's economy is in trouble. Trump trade war and panic stimulus all bode ill for Abe's government. The best thing you can say about Japan's economy in 2019 is that mercifully the year will soon be over. Again, I find that interesting because for Japan, it performed a pretty decent growth performance last year. I mean, for a lot of countries, that's not something too spectacular, but for Japan, that seems decent to me. Growth plodded along only modestly. Exports had fallen every month in 2019 at time of writing, while wages dropped in 7 of the first 10 months. Oh yeah, that might be the reason why they're saying it's so gloomy. Because while usually wages track with general economic growth, and so they grow along with it, sometimes general wages and income do perform differently from how the economy as a whole is doing. So you can have a situation where wages are not doing so well, and so the population's feeling fairly bad about the economy, even though the growth numbers for the economy as a whole are still looking pretty decently. So that's what might be happening. Far from an overwhelmingly expected tapering in 2019, where the Bank of Japan reduced purchases of bonds and other assets, monetary policy remained trapped in negative interest rate purgatory. The Bank of Japan has been doing a lot of stimulus propping up the Japanese economy, which isn't too dissimilar to what the US Fed was doing until recently and what they've been doing for a long time in Europe. Because Japan's economy is so fundamentally weak, it's taken all the Bank of Japan's resources to get it to grow that much. And because Japan's economy has just been so weak for the past, they're going to need all the stimulus that they can get, and I don't see Japan getting strong enough to sustain growth on its own without central bank help for a while. So that might be what they're talking about. And yet this performance may be the best we can expect as the global trade war marches into 2020 with no end in sight. 3 dynamics are coming to a head in ways that spell trouble to come. 1. The export decline is accelerating. The 7.9% year-on-year drop in November, the 12th straight month of decline, flashes recession warnings. Yeah, to the extent that Japan's economy is dependent on exports and trade, that's a critical weakness because, like in the case with Germany, as China moves up the value chain, it's going to be competing directly with Japan's exports. So Japan's economy will be weakened and undermined on that front because they simply cannot compete with China because of China's much lower wages. So using exports for growth is not going to work for high-income countries in general. Shipments to China, Tokyo's biggest customer, fell 5.4%, down for the 9th month. 2. Tokyo's rush to throw $122 billion of fresh stimulus at the economy smacks of panic more than fine-tuning. 3. That wild card named Donald Trump. It should worry Prime Minister Abe that the US president is hitting that a full China trade deal may be delayed until November next year. His suggestion that a deal is contingent on his winning a second term may validate something political observers have long expected. Trump wants the trade fight with China more than he wants a deal. If so, Asia is in for a chaotic 2020. So exports have been declining over the past year somewhat, but that's essentially not that far deviating from a trend since 2011, which has been just pretty much flat. The movement hasn't been as significant as they've been making it sound. Instead of a deal, Trump may very well double down, dealing new blows to Japan's export engine. It raises a specter, too, of him making good on threats of 25% taxes on imports of cars and auto parts. These odds increased as Trump's impeachment troubles at home prompt him abroad, both to placate his base and change the news cycle. Trump could weaken the dollar or expand the list of banned Chinese companies. It's all about maximizing pain. Last month, Trump seemed to revel in his belief that he has broken China's supply chain like an egg. China's supply chains are really Asia's, though. Japan is already suffering considerable blowback, making CEOs even less likely to boost wages in 2020. The answer, of course, is for Abe to get serious about deregulatory reforms he pledged in 2012. The failure to curb bureaucracy, modernize labor markets, stimulate innovation, empower women, and boldly address an aging workforce has left Japan uniquely vulnerable to the trade war. Abe deserves kudos for the giant Japan-EU trade deal that went into effect in February. The same goes for a bilateral pact with the US, one of Japan's parliament ratified this year. Yet, with the vital export engine sputtering, there may be even less scope for upgrades in 2020. This year, and stimulus push, for example, is the latest indication of how Abe has rewound the clock a few decades by focusing on what could disingenuously be dubbed pork barrel spending on trophy projects that lack a clear economic rationale, says analyst Udif Sikand of Gavakel Research. One short-term explanation is that he wants to offset the fallout from an ill-timed sales tax hike. Just like an earlier one in 2014 caused a mild downturn, the October bump to 10% from 8% is warping consumption. At the moment, it is creating false hope, an upward revision in third quarter growth from initial 0.2% year-on-year to 1.8%. Shoppers wanted a spree to front-run the increase. That portends a weak fourth quarter as households spend less and trade war worries spook business. It may also mean a year of regret for Abe. In October, he became Japan's longest-serving prime minister, only to get tripped up by his administration's latest scandal. This one involved an opulent taxpayer-funded cherry blossom viewing party arranged in Abe's honor. The real scandal, though, may end up being how Abe's friendship with Trump backfires on Japan. The trade war is tipping the nation toward recession, while Trump's professed, quote, love for Kim Jong-un is his tolerance of North Korea's short-range missile test makes Japan less safe. Put all this together, and Abe's remaining days could be fewer than investors realize. The year ahead could indeed be his last, as economic setbacks and a failure to meet reform pledges collide with a Trump romance gone awry. There is an obvious paradox here. The stock market is buoyant, offering false hope. But just like his pal Trump, Abe may soon confront the limits of economics. Investors are gleeful that the Bank of Japan is keeping the liquidity trap running. Tapering to 2020 seems no more likely than in 2019. Unless average workers feel the magic, though, Abe is creating a tale of two economies, one for the uber-wealthy asset-owning class, one for the vast majority of Japan's 160 million people. Well, if the high-income economy dependent on trade implements, well, free trade, then that would cause wage equalization, which would cause a divergence in the performance of wages from the performance of general economic growth. So the fact that Japan has engaged in free trade with developing economies might be a major factor contributing to Japan's poor wage performance. It's possible, I don't know off the top of my head what specific trade deals Japan has with what specific countries. But I imagine it has some large-scale free trade with emerging and low-income economies. At some point, doing economic catch-up with asset rallies in Trump-adjusted terms, that point could come sooner than anyone expects. It could be a brutal 2020 for the splashy marketing campaign known as Abenomics, and a man behind it. Okay, so that seems to be it for the article. If you like this video, please like, leave your thoughts in the comments, share this video with anyone you think might be interested, subscribe to the channel, and hit the notification bell.